Hi everyone, and welcome back to another technical analysis session here at Kingdom Health Creators. Today, I just wanted to take a look at a couple of stocks that I've been accumulating over the past week and the reasons why. We always look at technicals and we look at why we took these stocks. And for that, I'm going to just take a look at performance so far of all the stocks I'm holding. I have roughly 160 stocks in hand, and I'll just quickly show you how they have performed. Now we know that the Nifty and the Sensex are at all-time highs. The Nifty is 20,000 and it's almost at 21,000 now. And so it's important for us to know that at this point I'm not looking to add a lot of position. We already have a good number of stocks that we have accumulated at lower levels. The key is to always accumulate good stocks at lower levels when there is a technical requirement, and then we just hold them. It's simple as that. It's not a lot of hard, it's not like rocket science. It's just very fundamental principles that we use. So a couple of things that we got to note is the company should be fundamentally strong. It should be a stock that has come down and is starting to break out again based on a technical chart pattern. As I've already said before, technical chart patterns are always available. You can always see when a certain pattern is being formed, and then we can accordingly enter a particular stock, depending on whether we're watching it or not, and invest accordingly, right? So let me give you a quick look at how it has performed so far. So if you look here, these are the stocks that I'm holding. I've just taken downloaded a portfolio Excel sheet, and you can see here that I'm holding roughly, I'm actually holding 160 stocks, but these are the stocks that I've bought in the last 7 or 8 months. Okay? So we have 138 stocks. Out of these, you see these are the worst performers. We have about 9 stocks that are, let's say 10 stocks that are 8% or more, has given us losses of 8% or more so far. I haven't booked any of these losses, but you can see that there are about, so these are names: TV Today, TCI Express, Boro, Renew, East Metro, Solvara, Epigraph, Polyplex, Campus, Rajesh, and Delta Power, right? If you see here, you can see that I've invested about 9 lakhs total in all of these. And so the total loss that I'm facing right now on all these is about 1.27. Okay. Now, the next part is the most interesting part. If you go up the screen and just let's say that I pick anything that's 9% or above. Okay. If I were to drag this up, you can see that out of 138 stocks, almost 76, which is more than 50% of those stocks have given 9% or more return. All right. And if I were to look at the total profit from those stocks, it's about 16 lakhs on an investment of 40 lakhs. So 16 lakhs. That's 40% average return on all of these stocks. And if you look at them, some of them have given us even double-digit growth, right? You can look, there's BSC, there's Adani Power, Adani Green, Adani Enterprise, Parag Milk, MCX, Adani Airports, One Energy, and then there are quite a few that are also doing quite well. If I were to go down the list even more, some of them had done really well. Let's look at 49% or more. You will see that 25 stocks are given us 49% or more. The basic key here is to make sure that you hold on to your winners, reduce your losers. Now, I want to give you a disclaimer. I have been accumulating most of these stocks when the market itself is dipping down, or when these stocks are also, and when these stocks are also at lower levels. Okay, and when I see a breakout, so naturally there is a higher probability that these stocks will go up, and there is, rather than come down even further. And that's the way, it's a simple way of investing, right? So now let me show you 4 stocks that I've been accumulating over the last week. The first one that I want to take a look at is something called GSPL. Okay. And GSPL, right? So we're going to look at Gujarat State Petroleum. Now here's the interesting part. Okay, this was the volume candle lost on the last day. That was on Friday. You can see here that it had much larger volume than the average. So that's definitely a sign of accumulation, but if you look at technical charts, so there is a possible breakout. So let's look at this. Okay. Now, GSPL's highest value or the stock highest price was 380 or so, and this was in August 2021. So that's more than 2 years back, right? And then it's been in a down tick for most of the time. It tried to start breaking out of this consolidation area way back in June 2023, didn't work out. And this has been an entire zone of consolidation for it for a long time. And you can see here that it's been trying to break out, fail, 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 fail. Now there was one candle on Friday. There was a candle that closed above that level for the first time. If you look here, the most of the consolidation has been just below 300, and so now that there's a huge volume and this very healthy looking green candle, I've started to accumulate, GSPR, and I'm looking at a stop loss below 260 or so. But a possible target somewhere close to 380 eventually. And so I'm accumulating GSPO. You can see that there is a technical breakout. There is good volumes. We will see on Monday if there's a continuation of this, which would be a good indicator. But this is one stock that I'm looking at. Yeah, the next stock that I want to look at is Timken. You can see here, this is the chart for Timken. Now, yeah, if you look at the chart for Timken, you can see that there was a high of 3,700 something, and then two double tops at about 3,500, right? Since then, it went to a low of 2,800 or so. And actually, the best point of entry for this would probably have been there was this long period of consolidation. And if you look closely yeah, this was 30th November. Okay, there was a huge volume. And so ideally, once it broke out about 3,000 is when we should have entered it. I didn't see that then. I kept watching it and I noticed that it kept, making a higher high almost every day. So once it crossed this level, okay, this is 3,100 or so, that's when I actually made an entry. Now, the good thing about Timken is that it's as long as it stays above 3,000, that's a good point of accumulation. I entered at 3,100, and my stop loss is somewhere around 3,000, less than 3,000. So I will keep accumulating as it's in that range. The thing is that it's already gone up 100 points since I entered it, but it still hasn't done a technical breakout. And if it does at about 3,400 or so, then we can look at another 10%. So this is the second stock that I started accumulating. And the next stock that I want to look at is Greaves Cotton. Now, this is a stock I've entered before and exited out before. So it's again attempting to break out. And this is how you can see the technical charts here. If you look at the charts, you will notice that it's been this high, 209, was the resistance that I was looking at, and then 165, 154, and now it is very close to the next resistance that we got from 140. So the thing here, if you look at Greaves Cotton, is that gradually it's maintaining an upward trend here. It's not breaking this trend line, which is good. And so the basic struggle for it is to break above this trend, this big trend line. The moment it breaks above 145 or so, you're looking at a possible, at least a swing of 154 and then 165-ish. But the eventual target that you're looking for is somewhere around 200. And that's the reason why I'm accumulating Greaves Cotton here as well. Now, Greaves Cotton has not done a lot for me before when I've entered it before. I've exited also before. But this time I'm, looking at the accumulation. It looks healthy enough to take an entry. But this is not a very high-end entry. Okay. The last one I want to show you is something very interesting. It's called Irida. This came out at an IPO on, I believe it was on previous Thursday, right? So this IPO, it was offered at 35 or so. The IPO price was 36. Go up range, but not a lot of people got it. It was highly oversubscribed. And the first day it opened out around 49. It closed at around 59. And then there was a gap up. And what I did basically is I understood, hey, this is a stock worth taking, but probably at a lower price. But once I saw these three candles, see, this was the candle that was very important, the second candle here. And this is more to show you how candles work. Okay. The second candle here was the one that was most important. Okay. You can see that there was a high and a low. Now, if you look at this low was about 60.75, right? And on 6th December, this Wednesday, is when I entered at about 63. The thing was here, you can see that it broke below the previous three candles, and then it started retracing up. So this is forming something called a morning star pattern or a hammer candle. The moment I saw this hammer candle starting to form, and I entered at about 63ish or so. On Friday itself, it went up to about 74. Okay. So in about 2 days of buying it, it saw a return of 15%. And the potential is to just hold the stock. Now, this is basically a reading based on the candles themselves. There is no particular pattern here. It's fundamentally a sound stock, and because India is moving into renewable energy, this is the largest public organization that looks into funding renewable energy companies. So I think this is a good, and we've seen REC and PFC and a lot of these power loan lending corporations, power financing corporations, PFC, that's exactly what it is. But we've seen a lot of these companies, public companies, uh, doing really well. And so this is a play on that. And it's already seen a 15% return. And so I will continue to hold this. And so those are four stocks that I've entered. I just want to give that disclaimer again. I've been making sure that I'm not taking a lot of long positions now because the market is already at a high. We will look at booking profits gradually, and I've booked quite a few stocks over these last 2 3 days because we are at highs. Uh, if it continues, we just keep holding. But every time I see a breakdown, what I'm trying to do is reduce positions. Okay. So this is a simple way of investments. It's not very high risk, neither is it highly stressful. Okay. Just make sure you take good fundamental stocks that have been beaten down, that have come down quite a bit, and then look at a technical breakout, enter it, and it will do well. Also understand that when it comes to this sort of investment, you can't expect like what happened in Irida, right? You can't expect 15% move in 2 days just after you buy it. It might happen. It might very likely not happen immediately. But the thing is, if you're buying a good stock at a good value, it will eventually grow. Okay, and it will eventually start moving back up, especially if there is a technical chart breakout followed by volumes. And those are the two things that I look for. Just a reminder once again that if you're not subscribed to our YouTube channel, please do subscribe. And if you are someone who would love to learn how to do technical chart analysis on your own with the stocks that you're holding or the investments you plan to make, it will really help you improve in your investment journey because it will tell you which stock to pick and when to enter it. Right. So thank you so much. Hope this helped you. See you soon.